Here's another reason why you need to make sure that you get it done ASAP. There is a $500 a day civil penalty. So that's just punishment because you didn't do it right or you didn't do it right. However, for the people that do actually have something to hide, that are committing fraud and FinCEN catches them, they can face either 2 years in prison or up to $10,000 in a criminal penalty. But here's the kicker. It doesn't have to be or. They can actually face both the 2 years in prison and $10,000 in criminal penalty. That's even more of a reason to make sure that you actually get ahead of this and take care of it before the last minute.
Welcome to the Tax Relief with Timalyn Bowens podcast. Are you behind on taxes? Is the IRS threatening you or your business? Are you overwhelmed and confused about how to resolve your tax issues? Let's join Timalyn as she explains your options and how she may be able to help. Timalyn Bowens is America's favorite EA.
Hey family, welcome to episode 43. It's almost 2024 and today we're going to switch gears a little bit. All right. We're going to talk about something that is not directly tax related, but because the Treasury Department is in charge of it, many of you will reach out to your tax professionals for help with this to see how it will affect you. What am I talking about today? Episode 43 is all about the Corporate Transparency Act. This act was actually passed in 2021, and if you were in business in 2021, you know the tax world was crazy. Who am I kidding? The world was still crazy during 2021 because we were just, quote unquote, getting out of a pandemic, right? So with the Corporate Transparency Act, it was passed, like I said, in 2021, is going into effect January 1st, 2024, as of the recording of this podcast episode. And I say that because once I explain some of these things to you, you're going to understand why there has been pushback from certain organizations to extend when this is going to actually go into effect. So today, as we talk about the Corporate Transparency Act, we're going to talk about what it is, who's in charge of it, and we're going to talk about who does it affect. Okay? So let's get right to it. What is the Corporate Transparency Act? Passed in 2021, it was a law that we have passed to enhance the transparency of entities and entity structure. Now, you're listening to this podcast. If you've listened to other business podcasts or read different business articles and things online, you may have seen advice to start your company in a different state. Maybe it was for the tax advantages. Maybe it was so all of your information wouldn't be available to the public. Well, guess what? Whenever we have that type of scenario, we have the good guys and we have the bad guys, right? Everybody isn't going to do that just for privacy, so all their information isn't out. They're going to take it a step further and do illegal things with the ability to keep their information private. So what the Corporate Transparency Act does, it says, no. You may not have to have it available for the public, but you do have to report that information to the United States government. Now, who is in charge of the Corporate Transparency Act? This is going to be the Treasury Department, which rightfully so, a lot of people associate the Treasury Department with the IRS. But there is another department that functions under the Treasury Department called FinCEN. This is the Financial Crime Enforcement Network. All right, so let's think of it as a pyramid. All right, we have the Treasury Department on top, and then the bottom left we have FinCEN, which is the Financial Crimes Enforcement Network, and then the bottom right we have the IRS. Okay, so with the IRS, we're familiar. We have to report all of our income. We try to find as many expenses as we can, right, to lower that amount of income so we don't have to pay as much in taxes, okay? Everybody doesn't play by the rules when they file their taxes. Everybody doesn't play by the rules when they are giving any type of information to the government. That's where FinCEN comes in. If you are an individual or you're connected to a business or entity that has bank accounts overseas, you are probably very familiar with FinCEN. FinCEN is the organization that FBARs have to be filed with. With the FBAR, this is for organizations or individuals that have $10,000 or more, whether it's monetary, so money, currency, or different assets. That has to be reported to FinCEN each and every year. The Treasury Department is going to be what regulates FinCEN and the IRS. When we look at the Corporate Transparency Act, because you've heard that the Treasury is who is in charge of it, you may reach out to your tax professional. But technically, this filing that's going to be required with the Corporate Transparency Act is going to be legal paperwork. Think about when you started your business and you filed that paperwork with the state. Could a tax professional help you with that? Yes, but should they? In my personal opinion, I say no. And you guys know, if you've listened to this podcast since its start back in 2022, I like to stay in my own lane, right? I stay in the tax lane. I can tell you the different tax implications of things, but that doesn't make me an expert in that area just because I know the tax implications. I would strongly advise you, if you are not going to do this filing that's going to be required under the Corporate Transparency Act, if you don't do it yourself, to reach out to an attorney, okay? So because I brought that up, you may be thinking, okay, how is this going to affect me, and what filing are you talking about? Well, under the Corporate Transparency Act, you can imagine transparency of entities, any legal entity. So if you filed paperwork with the state to become a corporation, an LLC, which is a limited liability company, or an LLP, limited liability partnership, you are going to be required to file the beneficial owner information. Okay? You're going to see this referred to as BOI, not BOY, but BOI. The beneficial owner information that is going to be required will be the full legal name of whoever the beneficial owner is, their date of birth, social security number. They will need some type of picture ID, like a state-issued ID, a driver's license, or a passport. And they'll also need to report their current address and business address. So who is considered a beneficial owner? These are going to be people that directly or indirectly exercise substantial control over a company, or they own over 25% of the company. So what does this look like? This is going to be the person that calls the shots within the business, okay? The person that is running not just day-to-day, but major decisions that are going to affect the whole company. These individuals are required to file. Now, with the beneficial owner information reporting requirement, there are going to be 23 exemptions. Now, I'm not going to list all 23. However, if you're interested in learning about those 23, I strongly encourage you to go ahead and go to Bowens Tax Solutions and subscribe to Tax Tips with Timalyn, because as we get more information about the Corporate Transparency Act, I am going to be covering it there on that blog. And I have a variety of other topics that I cover for business owners. But let's just look at 5 entities that are exempt from this BOI requirement, okay? We have governmental authorities. They are not required to file this, but think about it. Their information should already be on file with the government, right? So it would be redundant for them to have to file again. The next organization we're going to look at is banks, all right? Same thing. This information should already be on file because of the amount of money that they're handling. Same thing with credit unions. For tax-exempt entities, so your 501c3s and all of the different ones that fall under that category, these also are not required to file the beneficial owner information. All right. Now think about it. When you have a tax exempt entity, it should be a group of people, all right, that's benefiting. So there's not really anybody that's going to be an owner or have substantial control. If there is with a tax exempt entity, there's something called a Schedule B where this information is already filed each year. So again, this is what takes them out because it would be redundant because the information is already being shared every year. Now, here's one that may surprise you. An organization that's not going to have to file this is accounting firms. But what is an accounting firm? So if you are a tax professional listening to this right now, I strongly urge you to take a deeper dive into the definition that the Corporate Transparency Act gives for an accounting firm. Because just because you may offer bookkeeping, that doesn't mean you qualify as an accounting firm. Same thing with taxes. Just because you file tax returns, that does not qualify you as an accounting firm based on the language in the Corporate Transparency Act. Now, for you, if you're checking this out and you want to know how this is going to all pan out from the perspective of an accountant, you can go to americasfavoritea.com and subscribe to the blog there. Okay? So when we look at who's required to file, there has to be a deadline, right? There's always a deadline. You can't just do it whenever you want to. Well, right now, like I said, as of the recording of this podcast episode, this is still going to go into effect January 1st, 2024. For entities created after January 1st, 2024, they have 30 days to file their beneficial owner information document with FinCEN 30 days after they start the business. Okay, so when we look at the start of the business, that means 30 days after they file the paperwork with the state to make them officially a business.
Editor's note. As of the original recording of this episode, the US Treasury Department has in fact made updates to the CTA. To learn more, please review the show notes for this particular episode. Thank you.
If we have an old business, and when I say old, I just mean they were open prior to 2024, they have the entire year of 2024 to get their house in order and get all of the information for the different beneficial owners so that they can report this before January 1st of 2025. Now, keep in mind, this passed in 2021 and it's kind of flown under the radar just because of all the craziness in the world. I don't want you as a business owner to put this on the back shelf. I guess I should say back burner. I want you to put it on the back burner or up on the high shelf to deal with later because you think you have a whole year. Because who really saw 2020 affecting us the way it did? All right. And then we had all of those different extensions and things. Those things aren't promised. So if you already know who the beneficial owners are of your company, you already have all the required information, I strongly suggest that you go ahead and get the information filed and taken care of. Now, because this is through the Treasury Department, don't think that it's going to get filed with your tax return. As of right now, the date of this recording, this is not something that will be sent with your tax return. This is something that is going to be filed similar to the FBAR on the FinCEN website. And just as a brief reminder, very quick, you need to know your full legal name. I think you got that one down packed, right? Your date of birth, social security number, have either your driver's license, passport, or another picture ID that's been issued by the state, your current address, and your business address. So as you're thinking about that, you might be like, well, I have all that information. That's pretty easy. I can take care of it whenever I want to. Here's another reason why you need to make sure that you get it done ASAP. There is a $500 a day civil penalty. So that's just punishment because you didn't do it right or you didn't do it right. However, for the people that do actually have something to hide, that are committing fraud and FinCEN catches them, they can face either 2 years in prison or up to $10,000 in a criminal penalty. But here's the kicker. It doesn't have to be or. they can actually face both the 2 years in prison and $10,000 in criminal penalty. That's even more of a reason to make sure that you actually get ahead of this and take care of it before the last minute. Now, just like I'm not going to judge your tax competency, I'm not going to judge your Corporate Transparency Act, like how well you are able to wrap your head around this. If you were having issues with filing this on your own, please, please, please make sure that you reach out to an attorney, because I always say back taxes shouldn't ruin your life, but the Treasury Department shouldn't either, right? On this side of things. So if you're a business owner and you found this helpful, please, please, please go ahead and go over to Tax Tips with Timalyn, which is found at bowenstaxsolutions.com, and subscribe. Because yes, I'm going to cover this in more detail on the blog, but then the different nuances as they come, I'm going to cover those as well. Maybe you're an accounting firm and you don't know if you have the reporting requirement. I'm going to go in and define the different exempt organizations so you can see whether or not you are one of the people that qualify for the exemption or not. As of right now, I'm going to say pretty much everybody is going to have to do this filing. Okay? So make sure you share this with your business owner friends. You subscribe to Tax Tips with Timalyn. And if you're that tax professional wanting to know more about this, you need to head over to America's Favorite EA and make sure that you're subscribed over there. I'd like to thank you for taking the time to listen today. I'd like to thank Jim Ray Consulting Services for helping me get this message out to you. I hope you found the information helpful. Did you know 1 in 50 people have a tax problem? Please share this episode with your friends and family, because you never know who may need help. Again, thanks for listening. Hey, just as a reminder, this podcast is for informational and educational purposes only. It provides a framework and possible solutions for solving your tax problems, but it is not legally binding. Please consult your tax professional regarding your specific tax situation.